Hello traders, Cousin Benny coming to you from theclosingprint.com on January 12th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices which are at all-time highs, with earnings this week starting with the banks on Tuesday. We could possibly see the markets pull in a little bit or consolidate. The big cap tech names were all at highs last week with the exception of Intel. The bond stock ratio and junk high yield corporate debt are bullish. We do have some caveats, however. Sentiment for the markets showing institutions were selling into the evening session on Friday. And we have NIMO and NAMO showing a bullish peak in their cycles, which could lead to a little bit of downside in the short term. Put-call ratio is neutral. We have the US dollar in a descending pattern, continues to pull back, did bounce up and try to test the 200-day last week. We have a 5200-day cross. We have bonds near highs. They're consolidating recent gains. And we have gold consolidating as well. Could continue to push higher, so keep an eye on the yellow metal. The heat map has been fading. Weakness in staples, financials, and materials going into earnings this week, with strength in internet, real estate, and telecom stocks. International markets have been fading. Europe is showing a little weakness, while China fully priced into the market averages at the present time. We'll look at some IBD 50 names that are showing relative strength, in addition to Market Smith Growth 250 and top 20 volume percent gainers in green. Bukowski shows 5 of 5 green with his CPI signal red since January the 3rd at 54.5%. That's neutral, with 5 bearish patterns, 6 bullish patterns, and 204 patterns waiting for breakout. Bottom line, with earnings starting this week and with the markets trading at all-time highs, we would anticipate that we could see a little weakness. I'm not thinking anything major, maybe 1 to 2%. We'll have to gauge it with earnings on Tuesday and Wednesday. Once again, we want to cover the XII ARCA Institutional Index, the 75 stocks most commonly held in institutions' core portfolios, and look for any signs of selling. Presently, we are trending, producing green and blue elder sticks. So in this particular case, we have a bullish chart, MACD is above its signal line, and we had an oversold condition in Stochk RSI recently, while the markets trade at all-time highs into earnings this week. This is happening while the S&P 1500 composite, S&P 500, S&P 400 mid-caps, S&P 600 small-caps have been on a buy signal since mid-October and continue to show strength. No red sticks here as well. That said, if we do break down the advanced decline percent of these 3 groups, big caps in the top panel, mid caps, and small caps in the lower panel, we can clearly see small caps have been trailing off, mid caps have been moving sideways, while the S&P 500 continues to move higher. So keep an eye on this. What we would be concerned with is a descending pattern, lower lows and lower highs over the next couple of weeks. And it can be seen in the growth versus value ratio that big cap tech names have been leading the markets presently. Will that continue into earnings is anybody's guess. But with this outperformance, I would think that value would probably come into play. And maybe growth pulls back in a little bit, so we'll watch for that this week. And we'll watch how the S&P 500 equal weight index, where no stock is more important than any other. So if those big cap growth names do start to fade a little bit, I would think that we could see a pullback to the 9 EMA, potentially the 20-period moving average in the short term. We're consolidating recent gains. We do see the number of stocks trading above their 50-period moving average at 74.35%. We're not overheated, so there's always a potential for this to turn back up and breadth to improve. However, CCI starting to move a bit lower, popped up a little bit last week. If this starts to trend to the downside, look for a retest of the 20-day and the short term. So this chart is neutral going into the first week of earnings. As the previous growth versus value ratio chart showed you, growth was outperforming. The NASDAQ has a lot of growth stocks in the tech industry and biotech that are performing very well. You can see this bullish engulfing candle last week. Been on a tear since the first week of October on this reversal. We continue to press higher. So this chart is showing you more of a bullish follow-through potential than bearish, with MACD above its signal line, not even showing a hint of reversing on this weekly time frame, and volume increasing last week. Obviously, the caveat is with IWM. Small caps have shown a reluctance to move higher, continues to consolidate recent gains from that October low. So keep an eye on small caps short term. Relative strength is above 50, so the trend is still up, though we are consolidating going into this first week of earnings. We also note that the New York Stock Exchange Composite has new highs, beating out new lows, staying above the zero line. The moving average is rising. We had a peak last week, so more new highs than new lows. To confuse everyone, including the bears, we have blue and green elder sticks, and NYAD advanced decline continues to rise and remains above the red zone in this cumulative chart. Any sign of a close inside of the red zone, 1 or 2 days, would signal potential weakness, as we've seen in the past in May and in August. Put-call ratio, of course, is in the white area or neutral zone. A little bit higher would be preferred. All this is telling us is that there were more calls bought last week than puts, and potential for them to get shaken out on a small pullback. While breadth in stocks listed in the NASDAQ, as we showed you, the weekly chart has been trending higher since the first week of October. That bullish engulfing candle coming on breadth that is starting to deteriorate a little bit. So if NAMO starts to turn down, watch for potential weakness in the short term. As NYMO for the New York Stock Exchange tells us the same thing. Now, we've seen times where we've peaked and flattened out, where price action continued to move higher over the weeks ahead. So this is not an end-all in itself. It's just something we need to pay attention to. If we get some sort of divergence, it'd be a reason for us to be more cautious. The same goes for VIX, which has been bullish going into the evening session, of course. We started to show a little weakness, probably just profit taking, but it's something we want to definitely keep an eye on going into this earnings season. That 60-minute chart showing potential for lower lows and lower highs if it turns red. We do have the daily chart telling us that there's been a fade and continues to show weakness in VIX. So a dip down into the 11 to 1150 zone is definitely a possibility, as is a spike to the upside if the big banks report terrible earnings for whatever reason. I doubt that's the case, but we'll be open to that idea. And we'll have to see it first to react. And the reason I say that is because skew continues to drop back down into the don't worry, be happy zone, below 135 and trending lower. It has been building higher highs and higher lows, so this would indicate that institutions are hedging above 135. It appears they are not, even with the geopolitical news subsiding. So they could be hedging with other vehicles like bonds, which we'll cover in a few minutes, or currencies, and commodities. Equities continue to outperform bonds, as this ratio between the 10-year yield and the S&P 500 in the lower panel depicts. As long as this ratio continues to drop and we see the blue 65 period moving average turning over like it did back in late 2016 into 2017, that would indicate we should be more open to the idea that the markets could continue higher. This is also reflected in junk bonds, which continue to hug the upper part of its Bollinger Bands. This is a bullish correlation to the equity markets, so if yields continue to move higher, that's telling you that investors are willing to chase yields. As the Fed lowers rates, they go after riskier assets, so this is risk on, while high yield corporate debt continues to give us the same indication. Bullish for equities as it continues to rise with the potential that this could pull back to a trend line or the 20 period moving average. We were looking for that last week, didn't happen, and the markets moved to all-time highs. That said, the 10-year yield has been consolidating recent gains. We'd like to see this moving higher. If institutions are hedging with bonds, you would expect to see it in AGG, the Barclays Aggregate Bond Fund. This is what bond traders use as their benchmark. Above its moving averages, this is a bullish trend. MACD appears to be turning. We do have a position in AGG in our portfolio. While TLT weekly did move back above its 10 period moving average on this weekly time frame, RSI has been drifting lower. We're still in its descending pattern, albeit a bit higher last week. Tested the lows of the previous week. Buyers stepped up, so we'll see how this plays out this week. If institutions are hedging with the 20-year, or we'll look for signs of hedging in the US dollar, which did move a bit higher last week, tested the 200 period, the magenta colored line, and the 50 period, the green line, which crossed last week. We'll look for a test or a resumption of this descending pattern, which would impact commodities, of course. So if you're trading gold, respect the trend here. RSI is above 70. We do have the shorter term 9 EMA above the 20. Looks like a test on Thursday and Friday. Buyers stepped up. Gold might bounce this week. So if the dollar does move lower, look for gold to move higher. And with home builders, some of them on our watch list this week, we'd like to see copper continue to move higher. It's consolidating. No Bollinger Bands are tightening up, so a move soon, most likely as volatility increases. We'd like to see that moving higher. As interest rates move lower, home builders might profit. This is a forward-looking indicator. Copper should be moving higher to forecast bullish things for construction, related names, builders, building supply, etc. The big caveat, of course, is crude oil. Last week's bearish engulfing candle took out the previous 4 weeks price action. So any further deterioration here would be a bearish indication for the markets, since there is a positive correlation to equities and crude. We also could potentially be in a sideways consolidation, this being the highs around $63, $64 a barrel, and the lows around 50, so we could bang around in here for a while. That's a probability as well as we start earnings season. The sector heat map is showing more oranges and reds over the last 2 weeks, red from left to right in the upper panel. We can see weakness in materials, also in staples, food and beverage, some weakness in energy as you would expect with crude oil moving lower. We did have a little bit of strength in internet related names, as well as aerospace and defense as you would expect. So keep an eye on these. In addition, Europe and those ETFs were looking a little weak. Strength in Turkey, also in Argentina persisting, and in China and the Asia indices, as we pointed out last week. We also noted last week all of the sectors were above their 20 and 50 period moving averages, with the exception of materials, which continues to show weakness, though it did bounce, and financials, which are back to the 20 period moving average. Depending on big banks that start reporting on Tuesday, we'll watch very closely on which sectors are showing the most strength. Real estate looks the best and pointed out by many in the trading room as it continues to trend higher. So watch real estate. It's really anybody's guess, so we want to see where the relative strength lies to start the week and position accordingly. Here is the IBD 50 list. Most of them are above their bullish 20 and 50-day moving averages. Many of them also are very extended, but some, as we'll point out, do look good for setups, while some like Brucker Corp are closer to their 9 EMA and have potential with RSI rising and testing this 51.89 zone. If we get through that level, we could see a breakout. Looks like a cup and an extended handle. A move above this level would signal the remaining sellers don't exist anymore and that demand is outstripping supply. Look for standard deviation to rise if it does break out this week, with RSI suggesting further upside. CDW and other stocks in this group. CDW does represent hardware, software, and a security related product line, which has seen increased interest last week with all the geopolitical news and potential for cyber attacks. Look for these stocks to move higher. FireEye did have some potential last week, quickly faded. Palo Alto Networks also showing potential for a trend to continue higher as well, with CyberArk being the best performer for the week, continue to move higher Monday through Friday. It's a bit extended now, so look for a little flag or pullback in CyberArk. It looks like it's going to test this 148.74 zone in the short term. Copart is trending. It's just above its 9 EMA. I like the retest of the 9 EMA. That leads to a potential setup for a swing. MACD is above its signal line rising, and standard deviation is pointing to higher prices, yet a bit extended. So look for a little pullback first in Copart. As we pointed out with copper moving higher, also consolidating at the present time, if copper does start to break out, we would expect to see the building products industry group as well as construction and builders as well resuming a bullish trend. So we're looking for higher lows and higher highs. RSI is back above 50. MACD's crossed and volume has been increasing. Watch standard deviation. We could lift off of this level, test 54.74, and then attack 56 in the short term going into earnings. If gold does continue to bounce, we saw Thursday, Friday buyers at the low of the day. That could lead to Franco-Nevada and Kirkland Lake Gold moving higher this week. Look for a bounce and a follow-through. RSI is rising. In mode is still in this descending channel pattern, back above its 21 period moving average. We do have the 9 EMA crossing upward, about to cross through the 21-day in the short term. If this keeps up, RSI is rising, volume increasing. So we might finally get that breakout that we were looking for over the last couple of weeks. Standard deviation is rising and volume increasing. As I know Mikey is looking at this one too, I think I saw a chart he posted in the trading room on Friday. Jazz Pharmaceuticals looking interesting. A lot of the stocks in the biotech, especially in the CRISPR gene editing biotech arena, there's a lot of stocks that look very good. There was an article in IBD this weekend titled Biotech Stocks That Could Soar in 2020 on CRISPR Gene Editing and Precision Medicine. So look for that in your copy of Investors Business Daily. There's a lot of good stocks in that list that I've noted in the second line of setups potentially that could move higher. Note Pfizer and Lilly, both of these doing well. I think Pfizer has got a better setup now. Lilly is a bit extended. I know Susie's been trading Lilly over the last few weeks after it broke out. So look for some of these names that are listed here to continue higher. QURE is one of them. Pod, Insulet, That one should look good. Blue, that one's possibly a follow-through. Z-Lab, another name that's mentioned in this article. So keep an eye on this. Read the article. Some very interesting setups that show potential for the week ahead in the genome and gene editing space, along with Jazz Pharmaceuticals. Here's a chart of Pfizer. You can see nice push off the 21 day. I think this has a lot of potential to get back to 42, 44. Lilly and Pfizer both buying some oncology firms, I believe. This breakout above 116, nice move over 20 points now on Eli Lilly. Jabil Circuits, JBL, also trending, looking for a push off of this level, $40 stock. RSI above 50, volume coming in on Friday. Looks like this could turn and continue trending higher this week. J2 Global and a lot of stocks in the telecom space looking very strong. This is a little bit extended, so look at some of the stocks in its competitor group that could continue as well. Kirkland Lake Gold, another one of these names in this space, along with Franco-Nevada. They look like they're going to push off the 21 day if gold gets a leg higher. Lulu is trending above the 9 EMA, looking for it to follow through. A little bit of a breather this week. Maybe comes down to the 21 day. We did see buyers at the low of the day on Friday, though. So there is a potential for this to rise. Momo, another Chinese stock. We were looking for a bounce off the 200 day. We got it last week. Tested the 21 day at the 9 and 20 crossing now. RSI rising. Look for a test of the recent highs with strength in Chinese stocks. On increasing volume, MACD's turning and standard deviation is pushing to the upside as well. PagSegura back on the list. Looks like it could continue. Each time it tests the 9 EMA, it takes off to the upside. RSI is rising. We're at the 200 day. If it gets above the 200 day, look for a test of 38, then 39, and potentially this gap, and then 47 in the short term. StoneCo, we're looking for a breakout as well. This is earnings, this big white candle. Consolidated along the 21 day. 21 day is rising. 9 EMA is accelerating away from the 21 day. Look for a breakout this week in StoneCo. Above average volume starting to pick up. MACD is above its signal line and rising. Winnebago is also back. This one could follow through. Looks like it's going to push off the 9 EMA. We had buyers stepping up Thursday and Friday. Consolidating along the 21 day moving average. RSI is above 50. Volume increasing. MACD will turn as a function of price, of course. So look for a follow through. Not a big mover lately. It's been consolidating at 52-week highs. Could see a breakout this week. Some of its competitors, Sky, CBCO, Thor Industries, this one could be interesting as well. Starting to trend. You can see how this is working out. Big cup and handle, maybe gets back to 140. Nice little break higher on Thor Industries. It has earnings in March, so we won't have to worry about that. So this might be something that sneaks under the radar, WGO and Thor Industries. So keep an eye on these. Both of these report in March. Flat base breakout underway. Some additional names from the Market Smith Growth 250. Buckle operates 450 Buckle and The Buckle young men's and women's apparel stores in 42 states. This looks like it's going to break above this pivot at 26.86. Set an alert at 26.96. Typically what we do, 10 cents above the breakout zone. Good earnings for a retailer, decent metrics, and above average volume. Beyond Meat, of course, we're watching how this plays out into earnings on February the 5th. This looks pretty strong. We traded it last week a couple of times, did very well. I'm looking for a little pullback for potential entry into earnings, an earnings run. Costco popped back up to the 300 level on good same-store sales for the holidays, looking for that to follow through. Look at the earnings on this company. Crazy. So this pullback to this support zone being bought by institutions above average volume, looking for that to follow through and break into the pivot zone. This is the buy area on a Market Smith or an IBD chart. Then look for a 20% gain above this level, which would be about 60 points. So 367 long term on Costco, has earnings out in March. Insulet, also an interesting setup. Looks like it might break above 187.25. Insulet Corp develops wireless handheld insulin infusion systems for people with insulin-dependent diabetes. Looking for this to follow through. It reports at the end of February. So we're looking for a lot of these biotech and related names in this Investors Business Daily article to continue higher into this week. Okay, traders, that's going to do it for me. This is Cousin Benny coming to you from theclosingprint.com with your weekend video newsletter for January the 12th, 2020. Look for a watch list later tonight around 11:30 on the East Coast and 8:30 on the West Coast. Otherwise, have a great weekend. I hope this helps. Take care, and we'll talk to you soon.